Hello, traders. It's 8:03 a.m. Chicago time on Monday, the 17th of September, 2018. Thanks for joining me on this Monday morning. It's a brand new week, middle of the month, and guess what? It's rollover week and quad witching Friday this Friday. So a lot of things to pay attention to this week in terms of volume moving from September to December in the U.S. indices. Again, quad witching Friday. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not necessarily indicative of future results. Coming into today, some of the main things that I'm seeing across the feeds are the European indices are trading mainly a little bit lower. And the U.S., there's talk of the U.S. preparing for tariffs on China. If you recall, on Friday, President Trump reportedly told advisors to proceed with $200 billion in tariffs. The SOC for that news was 29.1350 in the ES. Market dropped. The expectation, however, is that the tariff will likely be around 10%. Rather than the 25% previously announced and talked about in various tours that he does. China said that it officially is declining to talk about tariffs and it won't negotiate with a gun to its head. In other words, it won't negotiate with this threat being put on the table. So what is the point of that? Just pay attention to the news still. We've been under this tariff cloud for a while now, and it does impact the trade. There's news flowing all the time nowadays, and so that's how things are shaping up. As far as how the markets are positioned this morning, we're seeing risk slightly off, nothing really outstanding. We do see the dollar is off 49. The DAX is off 49 points, down 0.4%. The dollar is off 38 cents, 0.4%. And the bonds are off 12 ticks, with the NASDAQ off 19 points or 25 basis points. The leader today is crude oil trading at 69.42.43, up 0.62%. We're still trading October crude. The British pound or cable is also up. The cable's trading December at the moment, 131.89, up 72 pips or 0.55%. So the overall sentiment is slightly risk off. Nothing dramatic really. And so that's what we've got. Looking at the week ahead, given that it's Monday, we have nothing today really. Some Eurozone ECB speakers that came through this morning. Nothing left on the calendar for Tuesday. We have some really light numbers, and we have ECB's Draghi. If you're trading the extended hours U.S. time or the European hours, ECB's Draghi speaks at 3:15 Eastern or 8:15 a.m. London time. Pay attention to that. So Monday, Tuesday, very light on the calendar. Wednesday, we do have some numbers: housing starts, building permits, the current account, and inventories. We do have ECB's Draghi again talking on Wednesday. Thursday, a few numbers from Switzerland and the UK, and then we have Philly Fed initial claims, leading index and existing home sales. And on Friday, we have quad witching, which means expiration across stock index futures, stock index options, stock options, and single stock futures all at the same time. We also get US PMI on Friday. So overall, light early in the week, and then moderate potential economic release interruptions later this week. So that's that recap. Let's look at what was expected on Friday versus what we got, just to keep ourselves accountable and also to build the narrative for today. The plan that actually worked out on Friday was scenario 1 with a deep test. And the reason I'm saying scenario 1 is because we expected an open auction above the range, prior range, and a push into value. But what disrupted Friday's trade is the news, right? It looks almost like a scenario 2. The news on Friday ended up pushing us farther down than anticipated. So far, so good. Friday's plan was test. It's an open auction. Come down to value low. There it is. There's value low, the black line. We missed it by a tick. And then back up and consolidate. That's pretty much Friday. This is where the tariff, U.S.-China tariff news came in, and it caused an impulse, a relatively large impulse down, and it ended up carrying into a continuation trade to the low of Thursday, missed by a tick, and then came all the way back almost to the SOC. Didn't quite get the SOC at 29.1350, which is marked on the master levels, on the FT71 master levels there. And it just so those the level still untouched from the time this news came in. And so that was the disruption. But so far, so good on Friday. Saw some pretty decent opportunities, despite the fact that we're rolling. And then we had this disruption, and then all of a sudden the markets just found its bottom and started to move up. We have a profile that is skewed to the upside. It's not quite a P-shaped profile, but it's skewed to the upside with a pretty good taper on the low. Couldn't quite get to the century figure 2,900, and definitely didn't close the gap left behind on the 13th. So that's the overall look at Friday. Note also Friday went neutral. We broke to the upside again per scenario 1. Remember, scenario 1 was to dip down and push back up the green. We ended up extending the range up on, wow, my throat's dry. Hang on. Extending the range up before the news came in, and then we went neutral on Friday with a normal neutral day type closing the session. So overall, lower prices were rejected, and the expectation coming into the weekend is we're likely to balance with an upward skew. I actually expected, I was looking for a higher probability overnight high that would be a little bit higher. In other words, the overnight range was expected to be a little bit higher, but Europe was kind of heavy overnight, leading us to trade in sympathy with that. Looking at the overnight session or the extended hours, small gap. We have a small gap from the close of Friday, which was 29.1175, open at 29.09, 2.75 point gap. And then the market runs off immediately to the downside, consolidates throughout the Asian session, and in Europe, when Europe kicks in, we push all the way back to start to fill the gap, and then settle down here. We've really fought this area pretty good here at 29.06, and are holding steady inside of the point of control with mid and VWAP in the same location. The overnight session is pretty much Gaussian in its shape. In other words, it's completely balanced. The overnight volume is relatively light, but again, volume is a deceptive metric currently because of rollover. So that's the recap. Looking at the bigger picture and what we've done last week. Now, you know, we've moved up. We've been one-time framing for some time. We made all-time highs. So we continued the one-time framing up, one-time framing up, one-time framing up. We put in this high, which in the September contracts 29.17 and a half, and then from there we put in this beautiful channel moving down. And I think this day was the 27th, if I recall. 29th. 27th is the gap day. And then we moved down in a very orderly fashion, and then we broke on Rosh Hashanah last week. We broke on the Monday. We broke the downtrend, and I talked about the strong potential of a retest of 29.2250 to come next, because what this looks like is basically a flag formation. And that's what we have. So we were in a one-time framing downtrend, and then with last week's action, these 5 days right here, we've actually got a higher low on the weekly, and so we're resuming the weekly one-time framing up along with the daily one-time framing up as we push higher lows. What does that all mean? Anyway, it's all theory, right? It means that the bigger trend, the higher time frame trend, is to the buy side, and the daily has now come into line with the weekly. That's what that means. There's a fair amount of buying power that the market is displaying at the moment. Okay, so what are we expecting for today? Turn on the flex, the master levels here. Bum, bum. Master levels, 1 sigma is 29.2175. So the all-time high is well within range, 29.2250. You can see the 1 sigma volatility sigma close to close volatility sigma on the RTH session is right up against the all-time high. So that puts that high within range of today's session. And currently, what we have is a market that's opening in value and basically trading in balance. So nothing exciting this morning. This morning is likely to be a fairly quiet, tame trade. So let me turn those off. So this morning, open auction, I'm looking for a test down. I'm looking for an impulse to the point of control, the overnight high. I'm looking for it to balance out in here, pull back, and then drift to take out 29.14 from Friday, which we didn't complete, and then to hold and consolidate on the higher end of the range or above the range into the close today. So the bias for today for me is generally on scenario 1. The most likely scenario is for higher. Secondary, open auction that drifts up to the point of control and close and overnight high, and then has an impulse down and then holds steady in this range. I'm expecting the one-time framing to continue higher. Not expecting it to test or take out 29.02. Of course, all of this barring news. I mean, if news comes out that now the tariffs have gone from 200 billion to 450 billion or some such number, we're going to see the market roll over and push all the way back into 28.60 or so. So that's how the two main ideas are showing up. Nothing above us really, but the all-time high at 29.2250. Okay. So just remember, keep an eye, be aware that delta, the volume delta today, which I rely on a fair amount, is skewed because of rollover. And I want to remind you again before I let you go that if you don't know what it is you're working on today in a focused manner, if you don't know what that is, then come up with a plan. Really, there's no sense going through another day without you deciding what it is you're going to work on. Which setup are you honing in on, or which error are you going to eliminate? What's the expectancy you're after? You need to be working on something every day if you're going to get better. Seriously, that's what professionals do in sports. That's what professionals do everywhere. If you're inconsistent and you're looking for more consistency, especially if you're someone who has made money and has lost it all in trading, especially in derivatives trading, which is highly leveraged, you need to be identifying and really focusing on a daily basis on what it is you're looking to get better at. You know, if it were basketball, you might decide that today is going to be the day where I'm just taking free throws. And that's what I'm going to do. Take 1,000 free throws today to get better at it. The similar thing in trading. You can decide that today I will not interfere with a trade once I put it on. So I'm going to be patient. I'm going to wait for the trade or the market to come to me. I'm going to put it on and I'm not going to interfere with it. I'm going to let it either take out my stop or get my target. Stop interfering with my trades, because that's the biggest problem that I have. Or I have to stop waiting for more information, and therefore taking price risk and then always getting in too late and then not allowing room for the trade to work because my stop is now too far. That makes me nervous. Things like that. You need to identify. If you're not actively identifying what it is you're working on today, tomorrow, Wednesday, Thursday, Friday for this week to improve your expectancy and your skill set for the week, if you're not doing that, you're not making any progress. I promise you, you're just wasting time. You're just here to just see what the story does, you know? Kind of like watching a sport, watching soccer or football. You're just watching and making comments and are watching the drama unfold. But we're not watching, we're playing. So you better get into it and decide what it is you're going to work on today. Good luck.